What to expect from Tesla Q2 2022 earnings report. July 20, 2022. On Wednesday, Tesla will publish its earnings report for Q2 2022, which will reflect its work for the 3 months of the quarter. Analysts are already prepared and do not expect any unpleasant surprises. Deutsche Bank has added Tesla to its short-term catalyst call buy list. The company is expected to beat low-margin expectations in the second quarter, driven by good cost execution and continued pricing strength. In addition, the manufacturer is expected to confirm its full-year supply guidance for 50% growth, which would mean strong volume growth in the second half of the year. We believe the Street's anticipated sequential profit deterioration of greater than $1.5 billion more than captures the large headwinds faced in the quarter from COVID-related shutdowns in China, costs associated with closed-loop productions, and ramps in Texas and Berlin factories. While Tesla's share price has fallen 30% since the start of the year, this is largely reflected by supply issues. However, this is now rapidly improving, providing investors with an excellent opportunity to accumulate stocks. Barclays also expects Tesla's earnings to exceed current expectations. Analyst Brian Johnson sees modest second quarter earnings per share compared to consensus, but believes free cash flow could have been more emphasized given CEO Elon Musk's comments last month that Giga Berlin and Giga Texas are giant money furnaces. Wedbush analyst Dan Ives wrote in a note to clients on Monday that Tesla's ability to maintain profits this quarter will be front and center for investors. But all focus is now shifting to the outlook for the rest of the year, with deliveries soft this quarter due to the China shutdown. Tesla's ability to preserve margins this quarter will be front and center for investors, while all focus now shifts to the outlook for the rest of the year. Ives also notes that, while Giga Berlin and Austin factories are in significant ramp mode, this is a significant production capacity expansion for 2023 and beyond. Despite looming recession fears and increased competition, the analyst is confident that Tesla has no problem. Based on worldwide Model Y orders, he believes demand for Tesla cars still outstrips supply by about 15–20%. Estimates analysts expect Tesla to earn $1.81 a share, a 25% increase from the year-ago period. Projections call for sales to rise 38% year-over-year to $16.521 billion. Source reposted and summarized from Eva Fox at Tasmanian. My take: this quarter Tesla has too many things going against them. China factory shut down and the 2 new factories trying to ramp up. Q3 and Q4 will be much better. Tesla not guilty in teenager's fatal crash in 2018. July 20, 2022. A jury on Monday found Tesla not guilty of a fatal crash that killed 2 teenagers. Responsibility for the crash is attributed to Barrett Riley and his father. A federal jury in Florida sided with Tesla, finding that the manufacturer was not at fault for causing the accident. The jury placed 90% blame for the crash on Barrett Riley, who was driving at 116 miles per hour on a curve with a 25 miles per hour speed limit when he lost control of the car. They also placed 9% of the blame on James Riley, the teen's father. Barrett Riley was speeding down a dangerous stretch of road in Fort Lauderdale on May 8, 2018, when he lost control of his car. According to court documents, the car mounted a concrete curb, hit 2 walls on the west side of the road, crossed 5 lanes of traffic while rotating, and then hit another curb and a light pole before coming to a stop. The car's batteries ignited and caused a fire that killed Riley and his passenger in the front seat. Edgar Montserrat Martinez, a third passenger, who was sitting in the rear seat without a seatbelt, was ejected from the vehicle and survived. Reported Law 360. According to court records, Riley had a history of driving too fast, including a 112 miles per hour speeding ticket just 2 months before his fatal crash. The jury also found Tesla negligent in the crash, placing 1% blame on the manufacturer, and awarded the family $10.5 million. The company said that no car could have survived such a violent collision at high speed. Source reposted and summarized from Eva Fox at Tasmanian. My take: this is a very sad tale, of course. But of course, no matter what happens, people want to shore Tesla. Tesla Fremont produces 2 millionth car. July 20, 2022. Tesla has reached an impressive new milestone as its Fremont factory, backed by Giga Nevada, has produced its 2 millionth vehicle. The factory in California is the largest automobile plant in North America. Tesla has come a long way to become successful. Having been on the verge of bankruptcy and extinction many times, the manufacturer not only survived, but became the most striking success story in the automotive industry to date. Overcoming obstacles, one after another, Tesla reached another milestone, produced its 2 millionth car at the Fremont factory. This significant achievement for a young company was made possible thanks to the tireless work of the Tesla team, which worked to create as many electric vehicles as possible. This success was also made possible by Giga Nevada and its team, who made batteries for vehicles, the most important component of any electric car. Tesla CEO Elon Musk congratulated the factories on their accomplishments and was a little sentimental about how it all started. The company originally planned to build an assembly plant in Albuquerque, New Mexico, as a central shipping location. Tesla had also originally announced the construction of a separate greenfield factory to be built in San Jose, California. However, the cost of building new factories was prohibitive, so the manufacturer looked for alternatives. On May 20, 2010, Tesla and Toyota announced a partnership to work on the development of electric vehicles, parts, production systems, and engineering support. This included Tesla's partial purchase of the former NUMMI site, mainly consisting of a $42 million factory building. The Texas manufacturer officially took possession of the site on October 19, 2010, and held its opening ceremony on October 27. Tesla started production with just 1,000 workers. By 2013, this number had grown to 3,000, and after another 3 years to 6,000. In 2016, in preparation for production of Model 3, Tesla planned to increase its workforce. By the fall of 2017, Tesla had hired around 10,000 employees at the Fremont plant. In just the 3 years that followed, the company doubled the number of employees to 20,000. In 2011, Tesla switched from 20 hand-assembled Alpha builds to 50 Beta builds, production validation vehicles built entirely at the Tesla factory. The company had expected to produce around 5,000 Model S sedans in 2012. The first retail delivery of the Model S took place during a special event held at the Tesla factory in the summer of 2012. Production rose from 20 vehicles per week in August 2012 to over 200 by November 5, and then to 400 by the end of December. On March 20, 2020, the company announced a stunning achievement: the production of its 1 millionth vehicle. Just over 2 years later, Tesla announced a new milestone: the production of its 2 millionth vehicle at its Fremont factory. Tesla has pulled through heroically and shined, despite a tremendous yet harrowing journey, with many ups and downs. This struggle is likely exactly what was going to be necessary if a company were to successfully fight for a better future for our planet and our generations ahead. The company's goal is to accelerate the world's transition to sustainable energy, and Tesla continues to stay true to this value, despite all odds. Source reposted and summarized from Eva Fox at Tasmanian. My take: congratulations Tesla. How many months before you hit 3 million? Tesla and other EV owners reselling cars for profit. July 20, 2022. Many Tesla buyers are waiting several months to take delivery of the electric vehicles, due to high demand, exacerbated by inflation and the ongoing semiconductor shortage. Despite the letdown for consumers, some Tesla owners saw an opportunity in the market's current climate and decided to capitalize on it. Some Tesla owners in Los Angeles have realized they can make more money flipping and reselling their EVs as demand forces buyers to endure long wait periods. As the Los Angeles Times reports, one 33-year-old automotive enthusiast detailed the process to the publication, including his slow increase in profits with each new Tesla sold. Dennis Wang said he lost money on his first try flipping a Tesla, before going on to make $4,000 from his second attempt and $7,000 for the third resale. The process is not unlike flipping property or concert tickets. Additionally, Wang's Tesla flipping plans have him holding multiple Teslas on order, in addition to the one he owns, and soon plans to sell. I have a Model S currently that I'm probably going to sell within another 3 months, pending the market, said Wang. I also have another Model Y and a Model X on order. Wang is not the only person working in this unique EV resale market, as many buyers are willing to pay tens of thousands of dollars beyond retail prices. As one example, One person was attempting to sell the 2022 GMC Hummer EV1 for $220,000 on Facebook, while the vehicle sells for just $105,000 from the automaker. Other Facebook finds include a pair of Rivian R1T EV pickups, selling for $123,000 and $220,000, well outweighing the automaker's $67,500 price listed on its website. Eddie Greibest, who outfits Mercedes-Benz Sprinters for work, sold a Tesla Model Y that he and his family drove for 9 months. Greibest reportedly made $5,000 off of the sale, and the buyer flew to him in Boise, Idaho from Las Vegas, Nevada to pick the EV up. He went on to document his experience in a video on YouTube. Since my business is buying and selling these Sprinters, I'm aware of things like the microchip shortage, Greibest said. And everybody has been talking about how the secondary market especially has grown 20 to 30%. I was about to order a Tesla Model X and the Cybertruck. The delivery times were 9 months to a year, and that would obviously signal high demand, and therefore, low supply. From there, it was taking advantage of simple economics. Source reposted and summarized from Peter McGuthrie at Avanex. My take: what unusual times we live in, where this is a thing.